Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at FX and the British pound suffering another day. The trend continues lower. Something that's happened really since the middle of April. It's been a straight shoot lower, kind of coordinating with the strength of the dollar. We'll get to that in a minute. But if you look at it from a technical perspective, we're probably targeting 130, which seems a way off. But we just saw the 50 and the 100-day moving cross the bearish way. We saw the 50 dip below the 100-day. Typically, that's a sign that sort of on a bigger macro picture, we should see another push to the downside. And right now, I think technically it's still very bearish, as are pretty much all European currencies, whether you're part of the EU or trying to get out of the EU or not. It seems that they've had a rough go here, and I think that ultimately this technical shift is probably going to lend itself to more selling, more negative, more technical trend downside to the pound. And if you look at the dollar, yeah, the dollar's been one of the main reasons here. Going back to that middle of April reference, we've seen the dollar really been strong. We did see some modest weakness in the dollar post FOMC minutes. But that really hasn't had an adverse effect on any of the European currencies, specifically the pound included. So right now, the dollar strength is lending itself to the lower weakness to the pound, but it isn't helping the fact that we saw a modest pullback in the dollar since yesterday's FOMC minutes were released. We haven't seen any real reaction or positive reaction to the pound. So last, let's look at what about Brexit. Now we heard Bank of England Chairman Carney talked about the fact that the monetary policy will be ready for whatever Brexit brings. And right now, it's I don't know how to tell Mr. Carney this. He's been doing this a long time. But if you look at where the euro and the pound traded immediately after the Brexit vote, the euro is completely outperformed, and obviously it's a continent versus a country. But if you look at, we've seen modest declines here and there, but ultimately on a macro picture, we are still miles from where we were trading before Brexit, the euro currency versus the pound. And if you look at them both here, they've both been kind of coming down hand in hand as the dollar rallies. So there really is no specifics. When we look at what happened in Italy and we look at what's happening probably in a lot of the other countries in Europe, they're not really separating. You're not seeing any rallying in the pound versus the euro. So right now the euro or the pound itself continues to get pulled down. If their economy doesn't pick up, if they can't raise rates as quickly as they want to, and likewise, if the whole Brexit thing doesn't go to fruition, doesn't come through the way I think that a lot of people think, the separation of England versus Europe, there could be some more consequences. But right now, in the short term, we're looking at a technical target of 130. It is a ways away, but I think that after seeing those 50 and 100-day moving averages cross, along with the fact that the dollar continues to show strength, means it's probably not too far into the near future. And if you look at what the dollar has ahead of it, which we'll continue to see it strengthen, is not only a rate hike in June, but I think that also there's going to be some more hawkish talk, because I think there's some naysayers out there that think the Fed won't be as aggressive as they originally thought. That will only strengthen the dollar, and that will lend itself to weaker currencies in Europe. This is Todd Colvin coming to you from the floor of the CME Group.